Canadian mortgage arrears are expected to rise more than 50%, but the likelihood is it's going to be a lot worse than that. When we get into this article, you'll find out exactly why. So this came out via Better Dwelling, and it's coming from Fitch. Basically, one of the world's largest credit rating agencies sees a bumpy road for Canadian mortgages. Fitch Ratings' latest global housing and mortgage outlook shows mortgage arrears rate rising more modestly in Canada in 2024. Even more distressed sellers are seen, but pent-up demand will help absorb many before they fall behind. We'll get into the latter part of that, the pent-up demand, because the argument is just so laughable. It will make you laugh, obviously. We've been through this so many times on the channel, but anyway, we'll get to that. So Canadian mortgage arrears rate expected to climb 50% by year end. Canadian mortgages in arrears are expected to see a sharp rise after the recent record low. The arrears rate is forecast to rise 0.25% to 0.3% by year end. If it hits the high end, the rate could have climbed 50% from the end of last year and doubled the record low also in 2023. So what's really interesting is they're using that Bankers Association default number, which we've been through before. You know, when you go back and look at what happened with that during the 1990s, it wasn't accurate. Even as our good buddy John Flynn pointed out in the interview with him, which I will link at the end of this, he pointed out that that's not even including MICs and all these other people who have been lending really extremely risky mortgages. So you're only seeing kind of part of the picture when you look at this default rate, and that's what you've got to bear in mind. And what's really hilarious is the losses that are going on right now. And, you know, people are trying to say, oh, this is not a real estate crash. There is no real estate crash. Wake me up when the real estate crash comes. Well, this person lost 35%. I've provided numerous examples over and over on past videos. As you guys know, Shazzy is excellent on Twitter. He's often posting these, and you can follow him and see what's going on there. So Canada's pent-up demand to absorb even more distressed sellers. Okay, so where's this demand coming from? The steep climb is going to be felt, but the rate seems relatively low from a global standpoint. Don't let that fool people into thinking a large share of sellers won't be distressed. They attribute the low arrears to a cushion of equity and pent-up demand. Forced sellers will be able to absorb price cuts with substantial equity gained over the years. Canada's target of increasing immigration is adding to the demand already. There are people who've been waiting to get into the real estate market. Again, they are assuming that the people can afford it, and we're just going to get into right now how laughable that argument is. I know it seems logical, but it is completely hilarious when you actually dive into it. So look at this, guys. Average immigrant salary in Canada as of 2024, according to talent.com, is just under $40,000, much less than the average Canadian is earning. So immigrants are earning a lot less money to buy a house at Canada's average price, which is around $720,000. You're talking 20 times income to buy that house. So I'm sure that is adding so much to demand. I mean, they are just coming over and buying all these houses. I mean, if those people are buying all the houses, then we have an even bigger problem than we initially thought on this channel, because there's no way that they are going to be able to afford the payments. Now, obviously, I'm not saying that immigration doesn't have secondary effects on the housing market. Of course, what it does is it impacts rental demand massively, which then impacts speculation on real estate. It allows many more landlords to buy investment properties and rent them out. It also forces rents higher, which also changes investment equations for different landlords. But what's really interesting, and I want people to bear in mind here, is the risk for the future. Because think about it. If somebody comes in, which I don't think is going to be the Conservatives and Liberals, I just want to get that out there. But if somebody comes in and actually drops immigration back down to a sustainable level, then you're going to see all these rental properties that hit the market. And not only that, you're going to see rental prices that are going to be going down. We've already seen with the drop in student visas how that impacts rent prices across the nation, even in such hotspots as Calgary and Edmonton, which still have a lot of interprovincial migration. So it is very, very interesting to note, because rent prices, again, they're subject to affordability. You know, if people can't afford the rent, what can they do? And And in some cases now, they're obviously splitting houses into a basement, a main floor, and a top floor. And that means that they can make the rent lower per unit and again, change the investment equation. But you're generating new units of housing when you do that. And also the household size is then increasing, which makes all the numbers that politicians are constantly quoting, like the amount of homes we're building per person, completely irrelevant. Just like the basement suites that are absolutely littered everywhere all over Canadian cities. So it's very, very interesting that they once again go back to this immigration argument, which again seems logical but makes no sense when you actually dig into the nuance. So Canada has also become unusually flexible with its mortgage regulation to prevent defaults, since the country's regulators are no longer enforcing the maximum amortization in many cases. This has led to lenders extending loans indefinitely, preventing defaults. Okay, so that's not actually true. They're not extending them indefinitely. They're just basically extending them until that person renews, and then that person's going to go to renew and be in major trouble. A lot of the people that are in these situations have no idea and do not understand the situation that they're in. They could be miles upside down on their mortgage. They could owe hundreds of thousands of dollars more than the property is actually worth when you take into account the declines as well. And as you see, even when you look at Canada's national average price, which doesn't look at every single market, obviously this is just for the entire country, so there is a lot of nuance here. But when you look at what's happened, housing prices have come down from their record highs. And when you're talking about these numbers like 836,000 down to 719,000, that's over $100,000. So we're not talking about small amounts of money. These are much larger sums than the average Canadian is just going to have in their bank account and be able to write to the bank. Now, what's going to be really interesting is how the banks actually renew these mortgages, whether they're going to have to go through appraisals, what they're going to do, because a lot of these people, like I said, are going to be completely upside down. And now let's dig into what Shazzy put on Twitter, because again, this just goes to show what is happening in the peak insanity during the mania that we had in 2022. So this sad sucker bought in February of 2022, which as we know is right before the Bank of Canada started increasing interest rates. You can see that they bought this condo for $1.22 million. And right now it's sold 2024 in May for $790,000. That's a $430,000 loss, 35.3% loss. And add inflation to that, guys, you're talking over 50%. So all these people who say there's no crash in real estate in Canada, where are you looking? Are you just focusing on markets like Calgary and Edmonton that are also just propped up by hysteria and mania and are going through exactly the same cycles as what Toronto went through at a different time? I mean, what are you really focusing on? Because there is a Canadian real estate crash, and it's obvious when you look at these places which just went completely insane during the pandemic, which was places like Toronto, Mississauga, all the places that surround the GTA in Ontario, rural BC. There's tons and tons of people trying to sell their Airbnbs right now, and they're not moving. There's properties that are hanging on the market for years, and the sellers, they're just not able to reduce the price because they're probably at the limit of their loan. But they're going to get to a point where carrying that property is not going to be feasible anymore, and that could come to fruition through job loss or whatever else happens to them in a poor economic environment. And that is the point. We had GDP growth numbers that came out a couple of weeks ago. I don't really cover the GDP. I mean, I think it is so manipulated, and I'll tell you why, guys. Because basically, these numbers that you see here are mostly real estate and they're mostly government. Those are the two things. Over 50% of the GDP is just those two components right there. And when you really think about inflation as well, it's been much higher than what they're saying here. So year over year, in May, for instance, they said it was 2.9%. So what they do with these GDP numbers is they take the inflation number and then they use it as a deflator for the GDP number. So essentially, if inflation was more like 5-6%, which is what it actually is and what we know is true on this channel, then the GDP numbers would be negative. The economy would not be growing in real terms, because this is meant to be real GDP, but in fact, it is fake GDP. And that is why I don't cover it. So there's a lot of hype over the these numbers, but I wouldn't really look at them, and look at how it's performed. I mean, it's been practically flat. And when you take into account inflation, again, the inflation offset a lot of this GDP growth that was higher during 2021 and 2022. So you were still negative there. And that's where you really look at what's going on and you see the lost decade that is actually there, because Better Dwelling actually put out an article which also says about what's going on with the lost decade. We just erased a decade's worth of growth. We're essentially in a per capita depression, just nobody wants to admit it. So Canada's drop in real GDP only occurred over a few quarters, but occurred so fast it wiped out an unimaginable amount of progress. The most recent quarter of per capita real GDP is roughly the same level it was a decade ago. Canadians just experienced a lost decade, with all progress made in the first 8 years wiped out within the past 2. And then it's showing Canadian per capita GDP, which divides by the population. So obviously if you're increasing your population a lot and you're not able to increase the output because you don't have the jobs, you don't have the economy to sustain it, because the economy is mostly built upon credit lending, real estate, and government, then boy, you're in big trouble. And that is the case of Canada. They moved from a resource-based economy into an economy that has been built purely on credit and government. And it is just an absolute disaster. And at some point, I believe it will go back to being a resource-based economy, hopefully, because that's the only thing, that's the only saving grace that Canada really has, is its abundant resources. But unfortunately, red tape and regulations and climate initiatives are pulling back investment, and people don't want to deal with Canada. So it's interesting. The sharp slowdown was largely expected after going all in on credit-driven growth, such as residential investment and government-driven stimulus. It won't be a short period either, with experts warning it will last for decades. The slowdown currently happening is also why the economy is viewed as healthy. So buckle up. Things can get a little messy in the short term. And like I said, guys, when you're talking about inflation and where real inflation is, we go to shadow stats here. I've linked this below. It's incredibly important to understand back in the 1980s, the CPI would have been at around about 12-13% right now. This is for the United States. So let's say Canada is 10%, but still it is not 2.9% like the government is coming out and telling us. We all know this. So all these numbers that we see, like GDP growth numbers, are just a complete fictional number. I mean, it's just not accurate at all. And when you add in that extra inflation, like I said, it shows the dire economic situation that we're in. And when you look at the per capita GDP as well, that also shows the dire situation that we're in. And it's not just Canada that is in a situation like this. Also, the UK has per capita GDP falling at a rapid rate, and they have relied heavily on mass migration, which just basically gives short-term growth until the economy can no longer sustain itself from whatever it's running on, which in most of these Western countries is just a credit-driven bubble. So anyway, it's going to be very interesting to see what happens. If you want to check out that interview I did on the podcast channel with John Flynn and be part of the 1% that does, check it out right here and subscribe to the podcast channel. If you're looking for a VPN to protect your privacy in Canada, go to expressvpn.com/marketmania. That's the VPN that I use, and I will see you